What do you expect to hear this coming Friday?
I think Chair Powell's in a tough spot going into Friday because we got a long way to go until we have that September meeting you referenced, and a lot of data in between now and then. On top of that, he has the political pressure on the back of his neck he's been dealing with some time. So he can't lean one way or another, in my view, in this speech. So it's going to be a lot of, here's what's happening with the labor side of things. There are a lot of factors going on. Here's what's happening with the inflation side of things. Fairly muted so far, but we expect more to come. We have to wait and see. And so he's not going to lean too strongly one way or another. Ultimately, I do think that we're going to see more softness in the second half on activity, a bit more inflationary pressure, and that's going to lead to those cuts that I was referencing. But I think it's too soon for him to lean too strongly into that.
So you think it's going to be a snoozer? Is that what you're saying? I
think a bit of it. I mean, I think there's going to be interesting issues in the speech. As I said, there are a lot of interesting things going on in this economy. Labor market's a good example. We've had a lot weaker labor reports recently, but we're also getting a contraction in labor supply. At the same time, we're getting a slowdown in labor demand. Where the break-even rate is for the labor market and what holds the unemployment rate constant, not clear at this moment. So I think those issues will be outlined.
If the focus is on growth, which has been the focus for the Fed, the feeling that if there is a recession, the negative effects longer term of a loss of employment is so pernicious that you want to avoid that at all costs, even if it comes with higher inflation. Does that mean that they are biased to allow inflation to be perpetually above 2%? And I say perpetually, but at least over the next few years. Is that essentially a Fed that is willing to accept 2 to 3% inflation, not just 2% inflation?
Yeah, and I think this is the challenge with targeting 2% inflation is I think in this environment or in any environment, I think they wouldn't explicitly say it this way, but if inflation goes down to, let's say, something like 2.25%, I think they'd be just fine with that. I think once you're getting to numbers that are closer to the high 2s and to the 3s and even higher than that, that's where the discomfort starts. So it's really a soft target around those numbers. And in our own forecast, core inflation rises to about 3%, maybe even a little above by the end of the year. I think those numbers are too high, but they still favor the growth side of the mandate. And if they think that the inflation will subside over a few quarter period, they're willing to put, a few rate cuts through. So it's a balancing act. If inflation goes much higher than we're forecasting, which I don't expect, then I think rate cuts are less likely. So it's really about where is inflation heading and how willing are they to look through that to support the growth side.
They've been looking through it now for years. They've missed their target for 4 years.
Yep.
Inflation is close to 3%. It is in the high 2s. I don't sense any discomfort whatsoever. Do you?
Yeah, it's a great point. I think they're, they...
Well, I hate to be snarky about it, forgive me, but seriously, the chairman doesn't come out and sound uncomfortable with where inflation is at all.
Well, they started some rate cuts last year, and I think they paused it because they felt that there were risks to inflation, and inflation was grinding down slowly. But I do agree with the progress they've been seeing. They don't sound particularly worked up about it. And without the tariffs and those effects, if inflation were to continue to moderate in the way it was, I think we would still be getting gradual rate cuts. But it's this potential tariff effect which could lead to a reacceleration. That's what has them, I think, worried in the back of their mind.